Hello everyone, I'm Edwin. Welcome to the first episode of Personal Finance and Investment. I hope that my knowledge and experience can help you to make better decisions in your personal finance and investment so that you can complete the financial goals in your life and finally achieve financial freedom. And before we start, I wish you all good health in 2012-21 and hope our life can return to normal as soon as possible. As the first episode of the series, I want to talk about my prediction on 2021. So to make a better forecast for 2021, the most important thing is of course to review what happened in 2020. This is the S&P 500 price movement, and you can see that during January, February 2020, the market actually performed quite well. But since the outbreak of the epidemic, the world markets took a sharp turn, especially in the US market. Both the S&P 500 and Nasdaq fell by more than 40% and triggered the circuit break several times. So even Warren Buffett said that he had never seen anything like this situation in his life. So basically, at that moment, people expect that the stock market would keep falling by more than half. But then, since March, people expect that the US government will begin the quantitative easing and adopt several economic stimulus policy. In short, it means that people expect government is going to inject more funds to the market. Due to the expectation of the flood of funds, the stock market rebound rapidly. So you can see that even the epidemic situations were getting serious in June or July, but the US stock market is still be able to break its highest. When the president election was approaching, and you can see that the US stock market fell again, but after the election, the uncertainty was eliminated and the stock market rebounded immediately. The S&P 500 index rose for another 20% and closing to around 4,000 level. It's around 3,900 something. So I would say that last year is definitely a special year in investment history. Many people felt frustrated about the sharp rise in the asset price when the economy is still doing poorly, especially for those who sold assets last year. So the lesson that we can learn from last year is that the relationship between the stock market and the real economy is not as important as what we think. So what is more influential than real economy? Let's discuss it in part 2. And of course, in last year, the best performing sector was technology companies. There is social distancing restriction. We cannot go outside, so we rely more on online meeting to communicate. And that's why we buy a lot of tech stuff. And you can see that technology stock benefit a lot from these changes, and that makes the Nasdaq index increase around 40% from its highest before the epidemic. Like the tech giants Facebook, Amazon, Apple, Netflix, and Google all performed extremely well last year. Even in the Hong Kong market, the Hang Seng Technology Index was also doubled in last year, bringing the index above 10,000 levels. And then inside the index, ATMX is performed extremely well. They stand for Alibaba, Tencent, Meituan, and Xiaomi are definitely the key drivers for the surge in the index. And inside the technology sector, the best performing category would definitely be electronic vehicle. The key players like Tesla, NIO, and then the BYD both surged incredibly. So ranging from 400% to 1,300%. And that means in this year, Elon Musk has become the richest man in the world. And he has become a new icon in investment. And his Twitter has actually the ability to make the S price going up and down, just like the cases in Signal Advance, Dogecoin, and Bitcoin. And one of the asset classes I cannot miss is definitely the cryptocurrency. So after achieving 19,000 US dollar in 2017, the price of Bitcoin was all the way down. But since dropped to 4,000 level in March 2020 and was be able to stand above its lowest level in 2019, Bitcoin rebounded very quickly and broke 20,000 level in December. And then after going to 40,000 level, it once returned to 29,000. But then Elon Musk hashtag Bitcoin and add Bitcoin to Tesla research. It makes the Bitcoin rose again and then has above 50,000 level. And apart from Bitcoin, other cryptocurrencies also perform very well. Like Ethereum, it has risen more than 6 times last year, and Dogecoin became popular after mentioned by Elon Musk. It also rose by more than 10 times. Due to the boom in technology sector, Caffeine Wood became an idol in the investment industry. Several funds under her management have record 3-digit returns. For example, the most famous one, ARKK Innovation ETF, achieved returns of 240%. ARKW Next Generation Internet ETF achieved returns of 250%. ARKF FinTech ETF achieved returns of 170%. It is hard to achieve excellent performance for 2 or 3 sequential years, so market is now putting the focus on her performance in this years and in next years to see whether she's really able to beat the market. And last month, there's a breaking news in the financial market that shocked everyone, which is about the case of GameStop. In short, Reddit posts lead to a series of short squeeze in GME stock, and making the stock price rose by 10 times in a few days, and many hedge funds suffer from tremendous losses. So to know more about that, you may watch another video by me about the GameStop cases. Even though it happened last month, but I would say that its effect could last for the coming year. But let us discuss it further in next video. So all in all, it's still controversial about the outlook of the asset market. Both bullish and bearish view have their stand. Bullish investors argue that there is still a lot of room for technology stock to grow. In addition, they believe that when the epidemic passes, the market will rebound sharply, so traditional economic stock would be the next driving force. On the other hand, bearish investors stress that the market has already risen too much and reaching the bubble level. So regardless of what type of fundamental analysis like PE ratio, they think that all indicate that the asset price is far above the fair value. And it's now just like a musical chair game, so instead investors just want to dance until the last moment when the music stops and see who is going to be left behind at the end. And so, as both bullish and bearish view are reasonable, so how about my view? After we finish analyzing what happened in last year, in this video, I'm going to make prediction on the coming years in next video, based on all our analysis right now, and then including some historical figures, and see whether we can make a prediction for the next year. So that's all for today. Thank you so much for watching this personal finance and investment first episode. I'm Edwin. See you next time. Goodbye.